Hello, good morning, and today I wish to use the opportunity of Sunday to make a review of the American markets, S&P, what has happened so far since the coronavirus outbreak. This is a weekly chart, and I try to use the Dow Theory to explain the behavior. Now we start at this period, at this date, in February. Then there was a waterfall of price falling, and it's in 22nd of March, then the price rebound. And I would predict that the price will fall again. Why? Because of the Dow theory. And we see, look at the period from here to here. We'll call it the kind of accumulation phase. Okay. The accumulation phase will start from here. These two candles, these two weekly candles. Normally the price falls due to the fear to the market and also due to some kind of bad news. Then there is a stage of changing hand because for such a long distribution period, the specialists, the market makers, actually it's a kind of analogy. It's the warehouse. They already cleaned up no more of stock holding on hand, so that is a great opportunity to replenish the stock at the bargain price. And we can look at the volume here. It suddenly rises in the volume. This means that a lot of people are selling and also a lot of smart money are jumping in to buy those bargain stock. And the next candle, after this black candle, you can see there's a very little wick there. Okay, we start from here first. Now that will increase the volume. But there was a little white body and with a long upper wick there. What does this mean? This means still a lot of people who think the market won't fall and so they will jump in. There's some buyers. There's totally a lot of sellers, but only a few buyers. But now a lot of buyers think, oh, that the market won't be that bad. But they convinced because of the upper wick here, a lot of sellers, the selling pressure is high. So this is a combination of both the speculators, those who are optimistic about the market and those who are pessimistic about the market, and so that is the ultimate result for that is the, the price still fall. And then the next candle, we have to reduce volume, but it is still a black candle. This means that the upper hand is on the bears. Although there's some support there, but the ultimate result was that there was a lot of bears, and so that the opportunity for the specialists to stock up, to buy those, to change the hand from the weaker hand to the stronger hand, and now we have a very strong, very large volume, and a next black candle. No wick upper or lower wick there, and so that is very in line with this one. That means there's a lot of sellers, the speculators, together with the specialists. They're working hand in hand to bring the price down, and to this stage, for next two candles, then they absorb a lot of stock, the low prices, and they have the warehouse full of bargain stuff. Now the volume increased again, and this is suddenly that the white candle. This means that possibly the specialists are aiming and bringing the price up again because they have already enough stock. They have to bring it up. So they will test the market. Now they'll come to a distribution phase. Before they started, there's a great risk to the specialists that if they push the price up, there is still a lot of sellers. They will be in disaster to them. Okay, the price will go down, then they will be actually make no profit or even losses. So they have to test the market. They have to reduce the volume and see what happened to the price reaction. And now we see it's not a very perfect result because there's a long upper wick. There's been still many sellers. To the specialist, they wish to clear up all the sellers, okay? But now they're not too successful. There's still a lot of sellers, but the overall result is that we have the white candle, a white body, although it's very small. So they may think that is a possible shorting of the distribution phase. The next volume is much lower, but there is a huge white candle with very little upper wick, and so it is good result to the specialist. With small volume, but going, this means a lot of people, a lot of uh, ordinary people, the speculators, the dumb money, whatever, they will jump in because the greed. They are greedy. They think that it is otherwise be too late to jump in, and so they have jump in quickly. If they jump in quickly, that is good for the specialist, and they may start the next phase, But before they start the next phase of bringing the prices down, they have to test the market, to test the demand, see whether there are any buyers left. But the volume keep on decreasing, and this is a very important test to them, the so-called the gravestone doji, that very little black body with a long upper wick. This means that the selling pressure is high now and no more buyers in the market anymore. That are overboard. In such a case, that is the ideal situation for the specialist, for the market maker, to bring the price down again. For the profit they made when they bought here, sold here, they get a great profit, and also they will have the warehouse stock up with the bargain prices again. All in all, that is my understanding of the Dow theory. Of course, it may not be true because it's almost like a conspiracy, but it's all what I've studied from those books, and I hope this kind of explanation is correct. Okay. Sorry again for my bad English, but I like to practice my English and also my understanding of the market. I hope that will improve in both ways. Okay, if you happen to have listened to my video, that will be my pleasure, and hope to talk to you again next day. Thank you.